Hi, I'm Kep Kepner, CPA here in Dallas. I'm going to talk to you a little bit today about excise taxes. Some of you may be familiar with excise tax when you think of something you imported from outside the United States and you paid a duty on that. Think about the airports that you've been to. They have duty-free shopping areas. Well, that simply means free of excise taxes. So there are a wide variety of excise taxes. And generally, they occur because you pay that tax when you purchase something. It's unrelated to the income that you earn. So if you buy $1 worth of product that has a 10% excise tax on it, you're going to pay 10 cents to the government as an excise tax on that purchase. Well, so you say, well, Kep, what's that mean to me? I don't import things from out of the country. I'm just in here running my business. Realize that the Affordable Care Act, otherwise known derisively as Obamacare, is an excise tax because you must pay a tax if you don't buy it. Now, that doesn't seem to make any sense, but that's the way it is. So the ACA, Obamacare, has created an excise tax. If you don't offer certain health benefits to your employees, then Uncle Sam is going to tax you. Has nothing to do with whether you're making money. It has nothing to do with payroll taxes. It's just taxing you, the employer. Now, you already know that some people who don't have any kind of health care are paying an income tax on their tax return for not having health insurance. It's really not an income tax. It's really an excise tax. But rather than trying to collect it from individuals in a separate form, they just have a line on the tax return that says this is your penalty for not having health insurance. So the Affordable Care Act created a excise tax. Now, coming into play is what's called the Cadillac tax. Now the government wants to tax certain employers, get this, 31% of the businesses are going to be subject to the Cadillac tax. This occurs when a business provides health insurance to a group of employees. If the employee is single, then anything over $10,000 in health insurance. Oh God. Let's say, let me just keep that and cut back to it.
Yep.
Let's see, get the exact number. Sorry about that. Okay, 10,200. Okay. With the Cadillac tax, a company that provides a single employee with $10,200 of health insurance is going to be okay. No Cadillac tax. Or if it's a family, the amount is $27,500. No Cadillac tax. However, for every buck above that, the bottom line is Uncle Sam is going to charge that employer 40%. So what do you think the employer's going to do? You're a great employee and you're getting a great salary and you're getting a wonderful health care package that's worth $20,000. All of a sudden, Uncle Sam is going to collect almost $4,000 additional from the employer. Now, when they look at it, maybe you're a little too expensive for what they're paying you. Not only do they give you a good salary, but now they're going to pay you this $20,000 worth of health insurance. And oh, by the way, now they're going to pay an extra $4,000 in Cadillac tax on your health coverage. All of a sudden, you're getting to be very expensive for that employer. As the employee, you may think that's great because it doesn't affect you. But let me assure you it does, because employers today are looking at what they're paying their employees. And if they're paying you too much for what you produce, then you might be out on the street looking for a job. And incidentally, as a practical matter, it's better to not go looking for a job. It's better to start your own business. Then you have to solve those problems, but you have a lot of control over that, rather than leaving all of that in the hands of your employer. So don't be, be concerned if your employer is being taxed more, because that could affect you as an employee. Be concerned if the value that you bring to your employer is less than the value not only of your payroll, but of all your benefits and of the Cadillac tax and everything else the employer does. And then think about that. The reality is most successful small business owners don't have to worry about some of this stuff. In fact, if you keep your employees under 50, or eventually under 100, then you're going to be in a position where you don't have to worry too much about this as an employer. But if you begin to reach that point where your full-time employees or full-time equivalent employees reach 50, then you're going to be concerned about the taxes. And by the way, if you don't offer these services, then you're going to get charged $2,000 to $3,000 in penalties by Uncle Sam. Now that they call a penalty. They don't call that an excise tax, but as far as I'm concerned, they're both penalties on a successful business. So if you need help navigating this, let us know. Thanks.